Welcome to AHA Math and Science. In today's video, I'd like to discuss about the 10-year, 2-year yield spread and its implication for recession. So back in March of this year, when we had the banking crisis, we saw the biggest plunge in the bond yields and since the Volcker era. So that's like the early 1980s. And during this banking crisis, where a few banks collapsed. So as a result, we showed that this so-called the 10-year and the 2-year spread, which is shown here. So this is basically the 10-year treasury yield minus the 2-year treasury yield. So at normal times, this difference between 10-year and the 2-year yield is positive. In other words, the 10-year yield is greater than the 2-year yield. However, before each recession, you can see actually this yield spread becomes negative. And that's known as the yield curve inverting. So, but what's really interesting is actually as we get close to actually each recession, you can see this inverting start kind of shrink. In other words, this is basically become like less inverted. So now, like at zero, basically means the 10-year and yield and the 2-year yield are the same. So this is we actually called the de-inverting, and then we noticed that before each recession, you see the de-inverting. So you can see that. So the conclusion is basically the yield curve always de-invert before every recession. So you can see the de-inverting happens here, first become negative, and then de-invert. And it becomes negative, and then start to kind of come back up. So that's de-inverting. And same thing happened here. Same thing happened during even the recession, before the pandemic. So, and the two cases in the 1980 and the 1982 are slightly complex. You can see that in the 1980, you also have the yield curve de-inverting, and so is the 1982. But what's really interesting here is you can see that prior to this recession, you already see the de-inverting, a first attempt of de-inverting, and then a second attempt of de-inverting. It's actually during the second de-inverting when we start to see the recession. So now, back in March 2023, as the yield curve started de-inverting, we point out that this really kind of indicates a recession could on the horizon. But because of the complex structures, we will not be able to actually say that when the recession will occur. So we took a close look at the yield spread for the 1980 recession, and we noticed that the yield curve already in this downward trend prior to the recession. So here's the trend line. And then in May 1979, we had the first de-inverting when actually the yield curve went above the downward trend line. And then after a while, you can see it started kind of climbs, goes up and up, and almost hitting the zero, but it didn't. And then the yield curve started to become inverted again. So this is going down again. That's basically another inverting. And then it's actually, we see the second de-inverting, which is the yield curve started to come back up. And that's the second de-inverting that happened in December 1979. It is actually during the second de-inverting when we start to see the recession. The recession starts in early 1980. So it started in early 1980. So really it takes about like 8 to 9 months from the first de-inverting to actually the recession occurred. So this is something to keep in mind. And then fast forward to actually March of this year, you can see we are clearly kind of in this downward trend line for the yield spread. And then just around the middle of March, I think March 15, March 13, when you can see the yield curve just kind of spiked up. That's a de-inverting. That's the first attempt of de-inverting. And that's when actually happened on March 13, when the yield spread breaks the downward trend line. So, but at that time we did not really argue that actually recession. This just implies it's a recession because of the complex structure of the yield curve. Now, several months later, we can see that what really happened. There is this first de-inverting happens very quickly. But then actually in the past few months, since March, not like 3 months now, to like now middle of June, you can see the yield curves become inverted again. So in other words, the yield spread become more and more negative again. So this is basically why we said like it could be recession could be really kind of happens, not just during the first de-inverting, but maybe happen during the second de-inverting. So now with the current sort of like the yield curve, the question is, could the U.S. Treasury yield curve invert further? And we think that the answer is likely. So take a close look at what actually happened to the yield spread, just since the past 3 years. It's a downward trend line, the first de-inverting, and so at that point the yield spread is at lowest at a negative 1.07, and then now you can see that it went up then come back down. So that's inverting again. Now, as actually the Federal Reserve just at the recent FOMC meeting point out that even though they kind of paused the rate hiking at the June meeting, but it's certainly possible they may hike the rates actually more, in the second half of this year, maybe another 2 hikes, each like 25 basis points. So this is based on the June FOMC meeting. And the Federal Reserve clearly think that the economy still, has a lot of strength. In fact, the consumer is still kind of spending. So if they actually hike, then the 2-year yield is going to go up. Well, the 10-year yield may also go up a little bit, but at a small pace, and then cause the yield spread going to actually decrease again. So currently, it's sitting at a negative 0.93. It is certainly possible could actually go below the negative 1.07 and reach a new low here. And then at that point, the rates is just too high that it starts kind of really putting a kind of a huge damping on the economy, and then the economy is kind of slow down significantly and possibly enter recession late this year. So this timing is certainly kind of suggests that it's a likelihood that the recession may happen late this year, maybe towards the end of 2023. So this is based on the current yield spread. That assessment we can make at this point. Now we can also take a look at the initial claims data. This data is much more sort of like timely compared with the data for the unemployment rate, which is a lagging indicator. And you can see that since 1970, every recession is accompanied by a rise in the initial claims data. So here you can see the initial claims data went up. Same thing here. And another recession in the 1980, 1982, etc., etc. So currently, the initial claims data has been rising for several months now since the beginning of this year. So currently, it sits at 262,000. That's the initial claims, and that is kind of like a level that is still kind of considered low. But you can see that actually for the 1970 recession, the initial claims data, once it's above 200,000, we already kind of in the recession. Obviously, it starts from a very low baseline for the 1970 recession, so it's not really kind of comparable to our current case. And then for the next recession, which is 1974, you can see that the initial claims data is around the current level, which is 260,000 when the recession actually started. Very interesting data point. And the next 2 recession, which is the 1980 and 1982 recession, they actually, the economy entered recession when the initial claims data are much higher at 440,000 level. And then the next 3 recessions are very interesting, that including the 2 big bear markets of the 2000 and 2008. And then this one, it's even not it's not even a bear market, the 1991 recession. So it's a very small correction pullback actually. And this 3 recession almost occurred at a very similar level of initial claims, which is around 360,000. So these are really kind of interesting. So in other words, you could have a recession, but it doesn't necessarily mean that you actually have a bear market, because the 1991 is not accompanied by a bear market. Well, these 2 obviously we all know these are big bear markets. So could that actually the initial claims data continue to rise for this trend? Then at some point, it will hit the 360,000 level, and which may be actually a time for actually the recession starts. So this is kind of interesting, and based on this trend, so this is about 6 months, perhaps another 6 months, we don't know. So certainly it's possible that we may see a recession, sometime later this year, maybe end of 2023. This will really kind of interesting because both the yield curve and then this initial claims data kind of, corroborate with each other, telling us like more or less the same thing. So I hope you have actually enjoyed this video and find the information presented here kind of interesting. Again, your support really means a lot, for this channel. In fact, it takes a lot of time and efforts to first, smell the data. Actually, first find the data, and then smell the data, then analyze it, and then and finally produce a video. So it takes really a lot of time and efforts. So please make sure to click the like button and also to subscribe to our channel if you have not done so. And thanks a lot for your watching.